Welcome back, guys, to another Zero DTE video, and today Ernie's going to be talking about adapting trades, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy, guys.
So I have a question. I bought Mini NQ. I hadn't bought it before. So when I bought it and the VIX was like in the basement and everything, and then I'm looking at the pricing and I got in the tent early and I couldn't get filled on my exit and I wanted to see what happened. So it's gotten out, but it's relatively the same price now. So the question, I guess, is the expectations on the pricing, because if this were a lower volatility market, if it was lower than like it was yesterday, and the pricing right now, I'd probably get more for the option than I did. I would have got more yesterday than today because of volatility. So, because I can tell the pricing is cheaper now. Okay, I'm not going to make as much. When we're looking at the day and what's going on and we see something like that, expect, okay, you're not going to get as much. Don't change your expectations. If you're getting into the market, okay, I can get a cheaper price, is what you're saying, right? So just be aware of the situational thing.
Yeah, that's exactly right. The odds are that you're going to get a much better price. And that might mean you might be able to make the fly a little bit wider for about the same price, or push it in closer, maybe another strike or two for the same price. That's what I mean by cheaper price. So overall, the market now is adjusted to that. And the profit curve may be a little bit flatter, which means that you have perhaps less sensitivity to price or less gamma risk, allowing you to make decisions on a slower pace. All of those things are set up by that change, that relative change. We could be right at about 14 right now. If we were at 14 all this time, you wouldn't notice any of those things. You wouldn't notice the change. It would seem like the same thing. I'm just saying that you have to be cognizant that when things do change like that you are going to see changes. It usually presents at least some monicum of a better situation or an opportunity. So what you do from a trader's point of view is you adjust to that opportunity. Like I said, if you're trading a range of widths because the volatility is at a certain level, like it's in zombie land, I often say, like with the SPX or the E-mini, that I trade somewhere between a 10 and a 20 or a 10 and a 25 width for my flies, but I mix it up. Right? If you have a change like that, you might want to consider trading on the upper end of that range. Put on a 20 or 25 wide as opposed to a 10 wide. That's the kind of adjustment that you would make.
Yeah, that makes sense.
It doesn't mean, oh, crap, it went up 40% from 11 to 14. Therefore, I am going to put on a 50 wide. That would just be dumb. That's not what I'm saying. You make these slight adjustments that can make a material difference. And it might not work out that day, or it might. That's another thing that you don't know. But I do know that if you make these kind of minor adjustments on a daily basis or in reaction to the relative stance of the market, over time, those adjustments will make a big difference. In baseball or any kind of professional sport, baseball is such a good example of this because you have all of these guys and they're all fantastic athletes. They all on paper look exactly the same, but their stats vary widely and their stats are really consistent over time. And there are guys that are hitting, say, 250, which is an average hitter. And then you look at him compared to a guy who's hitting 325. It's not that big of a difference in terms of the spread of the number of hits that they get for every time at bat, just maybe 0.75 more hits per 10 times at bat. It doesn't seem like a lot. But the guy who is hitting 325 is considered a superstar. And it's because he makes these minor adjustments that bring him up just that extra level. And trading is much like that. You make these minor adjustments, and over time, from a statistical point of view, it turns you in from average to superstar.
One of the things I've recently realized and done and trying to make this adjustment is exactly what you're talking about. Because I did recognize when you said that about the VIX, or the VIX going up 40%. That's what caught my eye, was the 40%, not the fact that it went up a couple points.
Right.
But in my trading, what I'm realizing, because my biggest problem is exiting trades, taking the money when it's there instead of waiting and hoping and stuff. So and I've been trading, I started trading smaller so I could drill this into my brain and do it. But what I realize is when I'm trading cheap things, my tendency is to look at the price that I'm getting, the money, instead of looking at the percentage. So if it goes up 200%, but it's only a $10 or $17 option, if I've doubled it, that's fantastic.
Yeah.
But I'm thinking it's only $17. And I'm realizing I got to quit thinking that way and think in terms of like exactly what you're saying about percentage wise.
Because over time, that starts to add up. If you're consistently getting into the 200% range, regardless of whether sometimes it's $17 and other times it's $170, that's going to make a material difference over time. And it will look like the same trade, just a different scale. So yeah, you're exactly right. Look at it from that point of view. Look at it relative to what it is or was. It's far more important.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.